All right, let's unpack this. We are diving into some interesting stuff today. You guys sent in a ton of articles about this Federal Reserve interest rate cut, and it's everywhere right now.
Yeah, it's a big deal.
We got all the big names: CNBC, Newsweek, Axios, Yahoo Finance, CNN, Forbes, like everybody. But I got to say, I am really interested in some of these Reddit discussions you included.
Oh, yeah.
Yeah, from like the economics communities on Reddit. It's a really cool way to see how this stuff affects like real people,
Yeah.
outside of all the Wall Street stuff.
Absolutely. It's easy to get lost in all the financial jargon and the abstract numbers. But these personal stories you see on Reddit, those really remind us that these decisions have consequences for everyone.
Exactly. So let's get into it. First off, the Fed cut the benchmark interest rate
Right.
a quarter point on December 18th. Now, that might not seem like much, but this is actually the third rate cut since September. So people are starting to take notice.
Yeah, for sure. I mean, especially when you think about how for most of last year, the Fed was doing the opposite, raising rates, trying to get inflation under control.
Right, right. And speaking of September,
Yeah.
Yahoo Finance and some of the Reddit users pointed out that the first cut back then was a half-point decrease.
Oh, wow.
So it looks like the Fed might be getting a little more cautious, tapping the brakes a bit now.
That's one way to look at it. And another interesting thing is that this latest rate cut decision, it wasn't unanimous.
Oh, really?
Yeah, at least two Fed officials wanted smaller cuts or even no cuts at all.
Ooh, dissent. Makes you wonder what their reasoning was. But before we get too deep into the why of this whole rate cut thing,
Yeah.
I think we should probably make sure everyone understands what the federal funds rate actually is. Like, why should we even care?
Definitely. Gotta nail the basics first.
Right.
Yeah, so in simple terms, right?
Yeah.
The federal funds rate is the interest rate that banks use when they lend money to each other overnight. But here's why it matters to us regular folks. This rate basically sets the stage for all the other interest rates out there, the ones you see every day.
So things like mortgages,
Yeah.
car loans, credit card interest rates, like all that.
Exactly. Think of it like a domino effect, or maybe more like ripples in a pond. The Fed makes a move with this federal funds rate.
Okay.
And those ripples, they spread out. They affect all those other rates, like how much interest you earn on your savings,
Makes sense.
or the rates that businesses have to pay to borrow money, all of that.
Okay, yeah. Okay, I get it. So if the Fed is cutting rates, does that mean all those other rates I mentioned, are they going to go down too?
It's possible.
Well, like, will it be cheaper to get a car loan all of a sudden? Or finally be able to, afford a mortgage?
It's not a guarantee. It's not like a direct one-to-one thing. But the federal funds rate does set the tone. It influences where all those other rates are headed.
Okay, yeah. So cheaper borrowing, that sounds pretty good at first glance. But I have a feeling there's going to be more to the story, right? What's the real reason the Fed is making these cuts?
Well, the Fed is always walking a tightrope,
Okay.
trying to juggle these two main goals. First, keep the economy growing, keep things humming along. But then, at the same time, they got to make sure that inflation doesn't spiral out of control.
Yeah, it's a tough job.
It is. And they're always poring over economic data, trying to figure out how to, nudge things in the right direction, Find that sweet spot.
Yeah, Newsweek actually used that same tightrope analogy. I think it's a good one.
Yeah, it works.
So what is the data showing them right now that's making them lean towards these cuts?
Well, they've got this puzzle on their hands right now. Inflation has been cooling down this year.
Okay, that's good. Yeah.
That's good news. But it's still kind of stuck. It's hovering just above their target. They want it at 2%.
Gotcha.
And Newsweek pointed out that inflation actually went up a little in November. Yeah, driven by things like used car prices, hotel stays, and this one's kind of surprising, auto insurance.
Whoa, wait. Auto insurance. I never thought of that as part of inflation.
Right. But it makes sense. It's a cost we all have to deal with.
Yeah. Okay, so inflation's being stubborn. What about, the actual economy? How's that doing?
That's where things get even more interesting. On paper, the job market looks pretty healthy, right? Unemployment is relatively low.
Okay, that's good.
But there are these signs that things might be slowing down. And this is where those Reddit threads get really interesting. People are saying, hey, this strong economy doesn't feel so strong to me,
Right.
They're talking about things like fewer high-paying jobs available. There are whispers of potential layoffs.
Oh, wow.
And even just the fact that rush hour traffic is still a nightmare, even though unemployment is supposedly low.
Yeah. Everyone's still commuting.
It's a good point. Sometimes the official numbers don't tell the whole story, you know? They don't capture how people are actually feeling. And all those little stories, those anecdotes from Reddit, those suggest a level of anxiety that you might not see just from looking at the unemployment rate.
Absolutely, yeah. It definitely makes you
Uh-huh.
think, like, is the economy as strong as they say it is?
Right.
Or is there something else going on?
Right.
It's a bit of a mystery.
Right.
And, it makes the Fed's job even more challenging. They have to try and figure out what's really going on, and then on top of that, make the right decisions to keep things stable.
Exactly. It's a balancing act, that's for sure. It's a tough spot for the Fed. On the one hand, they want to give the economy a bit of a boost, prevent a recession if possible, but then they also don't want to accidentally make inflation worse.
It's like they're stuck between a rock and a hard place.
Yeah, exactly.
And, thinking about those officials who disagreed with the rate cut,
Yeah.
it makes this whole situation even more, I don't know, just emphasizes how delicate things are right now.
Yeah. For sure. It shows there's real concern about the potential consequences of these cuts. And speaking of consequences, that kind of brings us to another big question.
Okay, what's that?
Like, what impact are these rate cuts actually having? And, what is the Fed saying about the future? What are they predicting?
Yeah, let's talk about the outlook. What are they thinking is going to happen?
Well, they're now saying they're only going to do 2 more rate cuts in 2025,
Okay.
which is actually down from their original prediction of 4.
Oh, so even more caution then. I'm guessing the markets were not too happy about that news.
You guessed right. CNBC reported that the Dow Jones Industrial Average dropped by like over 1,100 points
Wow.
on December 18th. Right after the Fed made their announcement, other stock indexes also took a hit.
Man, that's a big drop. Makes you wonder, like, what does that actually mean for companies or for people with, like a 401k?
That's a good question. And it's important to remember that the stock market isn't always a perfect reflection of what's happening in the real economy. But a drop like that, that can signal a lack of confidence. Like investors might be worried about the Fed's ability to manage this whole situation. And some sectors of the economy, like, say, tech companies that rely on future growth, those might be hit harder than others. That's something to keep an eye on, that's for sure.
Yeah, definitely. And then there's that word that always pops up in these situations, stagflation. Like, what does that even mean? Should we be worried about that?
So stagflation is basically, it's like the worst of both worlds. It's where you have a stagnant economy, but also high inflation at the same time. So imagine like prices going up, but your paycheck stays the same, or maybe even shrinks. And then on top of that, job opportunities dry up.
Oof, that sounds rough.
It is. It's a situation that can make it really hard for people to make ends meet and for businesses to thrive too.
Makes sense. So is that why everyone's talked about the 1970s again?
Exactly. The 1970s, that was a classic example of stagflation. And yeah, some experts are worried that we might be heading in that direction again.
Not good. So the Fed's dealing with this, this delicate economic situation. But then they also have to consider the Trump factor, right? Like a lot of these articles mention that. What's that all about?
Yeah, the elephant in the room, it's hard to ignore. President-elect Trump's policies, those are a big wild card in all of this. He's talked a lot about things like deregulation, tax cuts, and tariffs. But how those are actually going to play out in the economy, nobody knows for sure.
It sounds like a real gamble. It could boost the economy,
Right.
but it could also make inflation even worse.
Yeah, exactly. It's like adding another layer of uncertainty to an already uncertain situation.
It's hard to predict what's going to happen. Any clues out there?
Well, there is one indicator that's been making headlines. It's causing quite a stir. Bitcoin.
Oh, Bitcoin.
Yeah, Forbes even ran this headline. The Fed's biggest nightmare is suddenly coming true as Bitcoin price surges.
Okay, that's a pretty attention-grabbing headline.
Yeah.
So is Bitcoin really the Fed's biggest nightmare? Why? I always thought it was just like this internet money thing, not really a threat to the whole financial system.
Well, that's a common misconception. But Bitcoin's price has been surging lately. It hit a new all-time high, over $106,000. And that's got some people talking about a shift away from traditional financial systems. The thing is, Bitcoin operates outside the control of central banks like the Fed. It's decentralized. And some people see that as a hedge against inflation, against economic uncertainty, like a safe haven almost.
So are people saying, like, Bitcoin is a safe haven, like a lifeboat in a storm? Or is this just a temporary thing, like a bubble that's going to burst? Those Reddit threads were full of people arguing both sides.
Yeah, it's a big debate. And to be honest, there are no easy answers. Some people genuinely believe Bitcoin is a viable alternative to the traditional financial system. Others think it's a speculative bubble that's eventually going to pop.
It's fascinating, though. Like, while the Fed is focused on all these traditional indicators like interest rates and inflation,
Yeah.
you have this whole other world of finance, alternative finance, that's reacting to their decisions,
Yeah.
maybe even influencing them in ways we don't even fully understand yet.
Right. It's all connected, It's this complex system, and Bitcoin, cryptocurrencies in general, they just add another layer of complexity. The Fed can't just ignore what's happening out there. They have to consider these global forces that are at play.
So much to think about.
It is.
So we've got a cautious Fed trying to balance economic growth with inflation. We've got President-elect Trump's policies adding another layer of uncertainty. And then we've got Bitcoin surging in the background, maybe signaling a shift in how we think about money and value.
It's a lot to process.
It really is.
Yeah.
It highlights how important it is to stay informed, to try and understand these forces that are shaping the economy. Okay, I need a break after all that. But you've done a great job explaining all this stuff. I bet our listeners are feeling a lot more informed now. Going back to those Reddit discussions, those are really something.
Yeah, for sure.
It's easy to get caught up in all the big, macro stuff. But when you hear how this rate cut is actually affecting people's daily lives,
Right.
it really brings it home.
It's a good reminder that, these economic decisions, they're not just abstract concepts. They have real consequences for real people.
Like that one commenter who said rush hour traffic was still terrible even though unemployment is low. Makes you think twice about, those official statistics. Like, do they actually reflect what's happening out in the real world?
Sometimes the numbers don't tell the whole story. You got to look beyond the headlines.
Exactly. So after this whole deep dive into, like, the Fed's rate cut and, all these different factors and what people are saying about it, what's the big takeaway? Like, for our listener, what should they be thinking about?
Well, I think the biggest takeaway is that, we're in uncharted territory here. Things are unpredictable. The Fed is being cautious, but the outlook is still uncertain. Inflation is stickier than a lot of people expected. And then you've got, potential impact of President-elect Trump's policies. That adds another layer of, well, just unpredictability.
Yeah, it sounds like a real wait-and-see kind of situation. Anything our listener can do to be prepared or, I don't know, to feel a little less, overwhelmed by all this?
Absolutely. First off, pay attention to what the Fed is saying. They put out a lot of information about their plans, their projections.
Okay.
And even though it might seem kind of dry, it can actually give you some clues about where they think the economy is headed.
So even if those Fed statements aren't exactly like bedtime reading,
Right.
they're still worth a look?
They are. And second, I'd say keep an eye on those alternative indicators, like we were talking about, things like Bitcoin.
The Fed's biggest nightmare, huh?
Exactly. While it's important not to get too caught up in the day-to-day price swings, Bitcoin's movements, they can give you a sense of market sentiment, maybe even a hint of broader trends that are developing.
Gotcha. So track Bitcoin. What else?
And finally, and this is probably the most important thing, just stay informed, stay engaged, and don't be afraid to ask questions. The economy is complex. There are no easy answers. But the more you understand about the forces that are at play, the better equipped you'll be to navigate whatever changes come our way.
That's great advice. So stay curious, stay informed, and maybe, I don't know, keep a little emergency fund handy just in case.
That's never a bad idea, especially in times like these.
Well, I think we've given our listeners a lot to think about today.
We have.
From, the ins and outs of the Fed's rate cut to, what it all means for their own personal finances. We covered a lot of ground.
And we even touched on the wild world of Bitcoin.
Always fun to explore the fringes of finance, right?
Right.
But before we wrap up, I do have one final thought for our listeners. If the traditional financial system is being questioned and things like Bitcoin are gaining traction, what does that mean for the future of money, for the future of value? It's a big question. There might not be a clear answer right now, but it's definitely something worth thinking about as we head into this new era of, economic uncertainty.
It's a fascinating question, and one that the answer is probably going to unfold in ways we can't even imagine right now. The only thing we can be sure of is that the future of finance, it's going to keep evolving, and it's going to keep surprising us.
Well said. All right, until next time, stay curious and keep those sources coming.